Dear viewers, welcome to our channel GVS Bank Academy. Now I am going to discuss about important questions for revision part 6 for paper number 3 CAIIB Advanced Business and Financial Management. These questions are very useful for tomorrow's examination, forthcoming examination. Question number 1. Free cash flow to firm. FCFF. Free cash flow to firm. What is the formula? Earnings before interest and tax minus into 1 minus tax rate. This is the plus depreciation and amortization minus capital expenditure, means during that year what is the capital expenditure incurred minus change in the net working capital. Change in current assets, change in current liability, difference, change in net working capital. This is the definition for free cash flow to firm. Then interest coverage ratio. Earnings before interest, tax, depreciation, amortization divided by interest expense incurred during the year. This is interest coverage ratio. Third, due point analysis, return on investment calculation. This is also due point analysis, also one way of return on investment. What is the formula? Total assets of the organization divided by total equity of the association, organization. Total assets by total equity. Fourth question, free cash flow to equity. Free cash flow to equity. Net income plus depreciation and amortization, change in working capital plus capital expenditure plus net borrowings. So net income plus depreciation and amortization, change in working capital, capital structure plus capital structure, capex plus net working capital. This is the definition for free cash flow to equity. And free cash flow to firm and free cash flow to equity, both are very important in advanced business and financial management. The first and this, suppose the first set of cash inflow 10,000 has a probability of 0.6%, and the second set of cash inflow probability 15,000 has a probability of 0.4%. 10,000 into 0.6 plus 15,000 into 0.4, that is equivalent to 12,000. And the cash inflow acceptable with high certainty is 11,000. 11,000 by 12,000 probability amount is equal. The certainty equivalent coefficient will be calculated as 11,000 divided by 12,000, that is 0.92%. 0.92. The certainty equivalent coefficient will be, this is it ranges between above 0 up to 1. This is ranges. This is the question number 6. Operating invested capital formula. Fixed assets of the organization plus net current assets. Net current assets means total current assets minus current liabilities, net current assets. This is the operating invested capital. 7. 3 methods of estimate of growth rate. How we can estimate the growth rate of the organization? Historical growth rate means from the last 5 to 10 years, what is the growth rate? Estimate provided by the company management. That is also consensus estimate, means most of the management are coming to a conclusion, this is the estimate, or through surveys. One is historical growth rate, estimate provided by a company's management, and surveys. 8. A takeover may be done through the following ways. A takeover may be done through following ways. Purchasing of equity from the open market purchases, negotiated purchases between the acquirer and the company, and allotment of preferential shares. This is also takeover may be done. Takeover. Open market, negotiation, acquisitions, preferential. Free cash flow definition. Net operating profits less adjusted taxes minus net investment plus depreciation. Net operating profit less adjusted tax minus net investment plus depreciation. Question number 10. Economies of scale arises from dash synergy in merger and acquisitions. Economies of scale of benefits arises from operating synergy in mergers and acquisitions. Operating synergy. This is first. 11. The International Valuation Standard 105. International Valuation Standard 105. Principal valuation approaches are. International Valuation Standard 105. Principal valuation approaches are. Very, very important this. International Valuation Standards 105. Principal valuation approaches are. One is market approach. B. Cost approach. Cost approach also called as asset based approach and income approach. Three methods. Market approach, cost approach, that is also called asset based approach, income approach. Question number 12, very, very important, 11 number. 12. Which of the following methods is included in asset based approach, cost based approach? Method, replacement method, asset replacement. If you are going to replace the asset, what is the cost? That is the valuation. 12 also very, very important. 13. Which of the following valuation methods would most likely to be used for business valuation of a firm entity? Which of the following valuation methods would mostly like to be used for business valuation entity? Discounted cash flow method, net asset method, industry price earnings ratio DCF. Industry price earning ratio DCF. Which of the following method would you consider appropriate while valuing the intangible assets? Very, very, very important. 14. Which of the following method would you consider appropriate while valuing the intangible assets? Relative valuation method. 14. 15. Which of the following methods if we can use in startup entities valuation? Startup entities. Venture capital method, Berkshire method, scorecard valuation method. Startup valuation entities. One is venture capital method, Berkshire method, scorecard valuation method. This is about the venture capital. 15. 16. Who is an angel investor? At least net tangible assets 2 crores. He must have at least, who is an angel investor? Net tangible assets must have at least 2 crores. Question number 17. Who is the authority for registration of valuers under the company's registered values rules? Who is the authority for registration of valuers under Companies Act? IBBI, Insolvency and Bankruptcy Board of India. 18. Qualified institutional buyer. Who is a qualified institutional buyer? Means institutional investor having minimum corpus or net owned funds 25 crores. Normally mutual funds, banks, financial institutions, pension funds, these are the qualified institutional buyers or institutions. This is 18. 19. Which statute governs the external commercial borrowings? So external commercial borrowings guidelines comes under Foreign Exchange Management Act 1999. ECB governs under FEMA 1999. 20. Value of firm is usually based on value of debt and equity. Value of a firm, value of a company usually based on value of its total debt and total equity. That means here long term and equity. This is a question number 20. Question number 21. Who will issue agency bonds? Agency bonds. Quasi-governmental organization entities means municipal corporations, local bodies, etc. That is called quasi-government or government belonging organizations. Quasi-government organizations, agency bonds issued. Question number 22. Which of the following factors are associated with arbitrage pricing theory model? 22. Textbook. Which of the following factors are associated with arbitrage pricing theory model? Price of a financial asset reflects a few key risk factors. At the time of pricing of a financial assets, few key risk factors it can take under arbitrage pricing theory model. What are that? GDP, gross domestic product growth rate. Inflation rate. What is the inflation rate? What are the stock indexes, stock market indexes? What are the gold prices? Risk-free rate of interest. What is meant by risk-free? If you are investing in Government of India bonds, SLR bonds, that is called as risk-free interest you are getting. And industrial production and personal consumption. By taking into consideration of these factors, GDP, domestic inflation rate, stock indexes, gold price, risk-free rate, industrial production. Then arbitrage pricing model, by taking into consideration of the key risk factors, they are going to price the financial assets. That is called arbitrage pricing theory model. Also, this was given in the textbook also there. 23. In case of valuation of firms for takeovers, which of the following provides a better estimate of value of the firm? In case of valuation of firms under takeover, which of the following provides? Free cash flow to equity shareholders. Free cash flow to equity shareholders. Dear viewers, these 23 questions are very, very important, and the level also moderate to difficult level questions. Moderate to difficult level. So, in the examination, they are asking this type of statement based analysis questions in the examinations of CAIIB. So, we have tried to provide the quality questions for your examination of advanced business and financial management forthcoming examination. Thank you very much, viewers, for the support which you people are extending to our channel. Thank you very much.